Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, September 11, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, if you check out the daily candle, you can see there was a lot of stuff on the docket today. We are in the vicinity of the old futures contract roll where weird stuff does happen. I don't have any idea whether today's weird stuff can be linked to the contract roll. I'm just saying we're rolling into the Z contract over the next several days, also known as the DECE or December contract. So Mrs. Market today took a trip down south, filled a left open gap that was left open from Friday to Monday's gap up. She ran another test, ran a test Friday, ran another test of the trend line. It was in the vicinity of the most recent low. So ran a test of the low, ran a test of the trend line, filled an open gap, and had a rip-roaring rocket ride away from that, finishing near the highs of day, right into the 20-period moving average. And this type of movement will certainly get the bulls right on board. And rightfully so. It was a fantastic move off the lows. Think of all the factions of traders they screwed today. Traders that were shorting the market in the hole, thinking that we were going to get the collapse. Traders that were trying to buy the dip at the open and had an absolute straight-on move down right into the vicinity of the trend line and the gap. The gap is at 540.43. That's why that line is there. Great. All that's dandy. What do we do with this information? For now, we use the 20-period moving average as somewhat of a bogey. The second bogey is the high right here where they tried to recapture some stuff. We talked about Irene. Irene was at 552.60. What did they do today? They closed back above Irene. There is no Irene anymore. Irene is finished. You had the decline. The decline got caught by the trend line. They bounced them back up. We're into the 20-period moving average, and we're going to use the high here at 554.43 as a bogey. You could see what happened into the end of the day up in that area. She spiked it, but could not, or would not, I should say, close above that number. That number is very simply the last pivot in the sequence before she can start climbing this big-time breakdown candle. Doesn't mean she gets all the way up to the top, but the door will begin to open to climb the breakdown candle. This is simply the way it works. Now, keep something else in mind. We'll just project forward a little bit just in case. So if she's up in this area where she was before, what was she doing up there? She was eating time off the clock beneath the former high, which wasn't that far away, building energy to make a move higher. Well, the energy ended up getting released in the southern direction, but right back up into that area. If it's a capital I, capital F, if she's up there again, that is uber bullish. And if she starts to push high toward the former high, expect them to make a new high. We'll be targeting north of 570. All that is in the future. All that is not necessarily what is happening. Let's get back to what is happening. What is happening is she had a reversal today on some volume. There was a pickup in volume. It was a reversal candle. The market had every single opportunity under the sun to absolutely trade lower. Get below Friday's low, make new lows, get below the 100-period moving average. All that stuff could have happened today. It did not happen. She got rescued at the gap and had a rip-roaring rocket ride. It's a bullish move, positive close. Take Mrs. Market at face value. That was a bullish tape by the end of the day. It's not how they open them. It's not necessarily how they trade them out during the trading day. But it is, in fact, how they close them each and every day. That is the most important print on the board. Mrs. Market makes a choice where to close them each and every day. That choice translates to something that is important. Mrs. Market thinks it's important to have the market close there. We're going to heed that information and say closing prints are important. Just getting the perspective of the weekly chart. So we see the trend line. She tested the trend line. We see the 20-period moving average on the weekly chart. Tested it last week, closed on top of it. Tested it this week, today, ricocheted off of it. Whatever you want to say they ricocheted off is true. Whether it was the gap, the weekly 20-period moving average, running a test of Friday's low, all those things are true. It doesn't matter which one we want to pick out or hang our hat on. What we're looking at is the weekly chart and saying, hey, check it out. If they get above and close, for example, this week by chance, above that most recent breakdown candle high, which is last week's high, that is 560.81. That is an uber bullish type of situation. If, capital I, capital if they did that. We would use the term, and this is a technical term, resilient. We would use the term resilient market if she actually reversed last week's reversal candle. The old reversal of a reversal. Now, we don't know that's going to happen. We have no idea where this week is going to close. We have 2 full trading days left. I'm just mapping out some what-if situations. How about inside the numbers? Let's check out what the commentary was today inside the numbers. What I urge you to do is pause the video, read the notes, and go back to the chart to double-check the work. And I'm going to cut to the chase because all these numbers you see on the board from a support perspective, they cut through them like a hot knife through butter. Remember this sleigh ride down on a 5-minute chart. You can't even find a green candle till you get to the gap. Now, we did have some resistance on the board. Let's see where that is. She's got some unfinished business between 549.30 and the semi-fat round number of 550. That's the same as yesterday. It was unfinished business today. Now, here's 549.30, and what's interesting is, look what happened right before the bell rang. All the way back over here, and you can see this is at 9:20 in the morning, right? The high was 549.34. They spiked it by 4 cents, and they essentially never looked back and declined right from the opening bell. It's interesting nonetheless. And if you're an Inside the Number member, you're in the live room, you understand what I'm saying about that number. You saw it 2 days in a row. And then, of course, you'll see later on, again, pause the video, read the notes, and go back to the chart to double check the work. But you'll see later on where we start talking about, well, all the way home to 540.50, which I was just rounding up for the gap. They weren't there yet. I'm just putting out the pivots one by one. You had 543.38. That was a former pivot. 542.68, former pivot. And then you have the gap. These are just numbers on the chart. They're not magic numbers. They were heading for the gap. They made that ultimately apparent. And then they started bouncing, and we had some targets. And I said, look, they're going to give you a bounce at least to 542 for starters. They did that. What we're saying here, and this is while they were below 540.43. If they can recapture the gap, the natural bounce should take them above 542 for starters. And then what happens is when you have trailing positions on, as traders are taught to do, in my live room at least, they can ride this thing like a stallion because they never really had any kind of meaningful pullback until the end of the day. That was it. They just went straight up. You can see it pretty apparent on a 15-minute chart. Pause the video, read the notes, go back to the chart, and double check the work. And then here are your numbers. Once they get above 542, they're back to the same things from before. And they did all that and then some. Let's go ahead and check out the folks down in Camp IWM. And you can see the price action here. They spiked yesterday's low. They recovered. They got back above the 100-period moving average. And technically, they're still just putting in a bearish wedgish pattern here, notwithstanding the fact that they went lower, came up short of the 200 period moving average. That's meaningless. They're still putting in a bearish wedgish kind of formation here after this down move. So until or unless they can recover the last breakdown candle high in the sequence, a la the moving averages as well, the 50 and the 20 period moving average, then this is still going to be either a bearish wedge or a dead cat bounce, a bearish flag if they stay all the way down here. And as you can see, flipping over to the weekly chart, the weekly will be very, very uber important. Are they going to close above the 20-week moving average? Are they going to close below it and or last week's low? That all those things will be important signals one way or the other. And when you look at the old Fibonacci retracement, you have a low here, a high here. They did a 618. They hovered. They got the 618 yesterday. They got it again today. They went lower, but they never got to a 75 or a 786 or whatever it is when the thing comes out of the box on these charts. Just putting things in perspective right now, if this sticks, or for now, you have a low and you have a higher low, and we'll heed a higher low. Give up that low, come below today's low, close below today's low. That's going to be really bearish, and that's going to open the door right for these lows, probably in short order. But if this holds and you have a higher low, they can do a retracement in the other direction. How does this work? Well, you take this high and you go to a low and you say, well, how much are they going to retrace? Well, 382 is 211 and change, maybe 50%, 213, 618, 215 and change. Anything in here is where you can expect. You got moving averages in here. If this is going to low stick for a while, then they're going to bounce up to at least here and most likely the 50% or 618 retracement. See how this works? It's not magic. It's not rocket science. What about the folks down at the transportation department? Check out that tail candle. That's a hell of a tail. Hella, tail. Hell of a tail. Under normal garden variety conditions, these reversals today, these tail candles today, these are bullish signals. You're likely going to get more upside. That's what these say at face value. If it's a fake out, so be it. Then I'll have been faked out. But this is bullish on its face. Every opportunity to go lower and took the alternate route, took the rescue operation. It's bullish on its face. For now. Qs, what would you expect to see? You would expect to see the same thing. They're trading up into or the almost into the convergence of this 20 and 50 period moving average. Same routine. Could have been looking into the black hole this morning. Could have tested Friday's low. Could have gotten lower. Chose the alternate route, the rescue operation. Reversal on volume, institutional participation. Yes, on volume. Face value, it's a bullish move. They're going to want to challenge the next breakdown candle high in the sequence. It happens to be a spike above these moving averages. Wouldn't that be a kick in the pants by about Friday afternoon on a Friday floater? We could see that one unfolding. And by the way, just for the record, there will be more volatility. There will be another leg down after this leg up is finished. This isn't over by any means. Nice tail candle in the XLF on volume. Volume yesterday, volume today. Yesterday tested the breakout area, the most recent breakout area. Today stared into the abyss, came down to the neighborhood of no man's land. You could see here just short of the 50 period moving average, just short of no man's land. Bull-bear battle type of places. The other side of that is a gap, and then they're below the moving averages. What do they do then? Do they go to the next gap, or do they bounce? Well, we don't have to worry about that right now because they just bounced on a rocket ride along with everything else today. And right here, the bulls are looking to recapture the 20-period moving average and the gap left open yesterday, and they do that, and you're back to the trend is your friend until she throws your shit out the window. How about this over in Smashmouth? First, you have a low, and then you have one of them higher lows. And then you have a day where you're up 5%, $11 on volume. Not tremendous volume, but decent volume. There's institutional 37, 238. Maybe they get into these moving averages, 240 or so. There's another gap up there. This is where they're headed at present. Whether they get there all in one shot or they get there over the next couple of days, we don't know. But that's really where the bulls are headed at present. Big day for the semi space, smash mouth. Little short covering situation. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. Common sense market analysis.